Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Parag Milk Foods. Can this perform by 2023 or will it be just a laggard in the next few months as well? So let's get started. First order disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Parag Milk, here's a small request. Kindly support me on Patreon or YouTube. And once you support me on Patreon, it will help me grow the channel, help you also ask me questions and get answers in greater detail. Once you pay $10 to me, then you get access to my portfolio, my watch list, and a number of podcasts that I put up from time to time. Also, if you pay $100 upfront, then you get 1 year access by paying for 10 months. For detailed market or company talk, directly contact me on email. And also, if you cannot pay on Patreon, you can pay directly on YouTube and you get the same benefits as Patreon members. Plus, you get 4 exclusive videos which Patreon members also get, which are on results of companies. Now, what the company established in 1992, this company provides milk and milk products, and one of the top brands in northern part of India, has expanded base quickly across the nation, and they provide various milk products as brands. So Parag has many brands that are there. Some examples being Go Cheese and Govardhan Ghee, and the market cap of the company is around 1300 crores. If you look at the financial, these are Q2 numbers. So these are not quite Q1 numbers, but Q2 FY22 numbers versus Q2 FY21 numbers. So this is September quarter numbers. And you have sales growing by around 6%. Profit grew quite well by around 45%, but you have to understand that due to the pandemic there were issues even going through July and August. So September was good, so things look really good this time around because of that. So the base is extremely low last time around. There's decent promoter and institutional holding, 11% return on equity, 8% of operating profit margin. Nothing great, but not bad either in a very competitive environment. And it has a little bit of debt, but you can call it as virtually debt free. What has been ailing the company or the stock? Because the stock has not performed that well as other FMCG companies or food companies, as we talk about top class companies. First of all, there is heavy competition from Amul. There is heavy competition from other unlisted players. There is heavy competition from listed players as well. So there is very less room for gaining a lot of market share here. It is a laggard in industry with Amul as the big bull, and it has a huge market share, Amul, in the milk, especially in the milk section. So mainly, if you look at this company, this mainly sells milk, whether it is toned or full cream milk, and that's where Parag Milk has had its forte over the last 10 or 20 years. So over this, if you look at Amul is huge in this segment, so that is why this has been, you can say, underperforming. Shutdown has also led to more market share erosion. So what has happened is Amul has gained a lot of market share last year, and it is just gaining traction because the quality, or the, you can say, perceived quality of Amul in terms of the consumers is much better, and people can spend a little bit more just to buy an Amul milk rather than something from Parag. So that's one of the biggest reasons why the company is not doing well. And investors want the best in business. So what you have to look at is, even investors who want to invest into companies, they want the best of the companies. So they would like to buy something like a Nestle. They would like to buy in other type of food, or you can say F&B brands and all, or take home services like you can say a Jubilant Foodworks look better to them rather than buying into a Parag milk. It had lofty valuations as well in 2018 and 19, and that's why the struggle, even after its IPO, it did extremely well, and then the selling began from 170, 180, or just above those levels. So I think the problem lies in the business itself. The business is fine, but there's so much of competition that investors look for other businesses which have, you can say, market leadership or monopoly in the same you can say sphere. So need of innovation and constant research is extremely important here, and they have to spend on R&D and bring in probably more products, or have something going for them so that profitability is sustainable and there is a sustainable market share growth that could take place. So, what is to be done, in my opinion, avoid at the moment, especially with the kind of market selling that we are seeing. There are many other stocks in other consumer, you can say, domains that are coming at very attractive levels. So, rather than looking at Parag Mill, you can look at larger companies which have higher, you can say, resonance and greater you can say market share, as well as a monopolistic or duopoly kind of a situation. So market leaders will keep outperforming, and massive sell off can be looked at. So can be looked at 120, 130, around those, or extreme sell off for a 20%, 15, 20% gain. But not all consumer stocks are good. You need to understand that and buy into top class companies which are market leaders in the space. So this was my video on Parag Mill. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it. Thanks a lot for watching.